Hey everyone, welcome back to Corporate Decoder, the place where we try to shine a light on the hidden details of corporate filings. And today we've got a deep dive into KKR Co Incorporated's latest 10Q report for the quarter ended the 30th of September 2025. You know, they say 'tis the season for strong earnings, but let's see if KKR's report is a solid hit or just another pumpkin spice latte of a quarter. Before we get into the nitty-gritty, if you enjoy getting straight answers and insights from these dense SEC filings, make sure you hit that subscribe button and ring the notification bell so you don't miss any of our future decodes. We also have a growing community over on Discord where we break down these reports even further, so hop on over and join the conversation. The link is in the description below. Alright, so KKR Co Incorporated's latest quarterly report. This is the kind of document that usually makes investors' eyes glaze over, but we're here to decode it for you. Let's start with the big picture right in the financials to see where the money is. Looking at the condensed consolidated statements of financial condition as of the 30th of September 2025, the total assets for KKR Co Incorporated stand at a massive $398.5 billion that is up from $360.1 billion at the end of 2024, an increase of about $38 billion. That is a pretty substantial jump, showing growth in their investment portfolio and insurance operations. On the liabilities side, total liabilities are just shy of $323.1 billion. That is also an increase from roughly $298.1 billion at the end of last year. So they've taken on more obligations, but their assets have outpaced that growth. Now for the equity part, which is where the owners of the company KKR Incorporated itself really see their stake. KKR Co Incorporated stockholders' equity grew significantly from $23.7 billion at the end of last year to almost $30 billion by the end of September 2025. This is a very healthy sign for the shareholders of the parent company, showing increased value. Let's look at how profitable they've been. For the 3 months ended the 30th of September 2025, net income attributable to KKR Co Incorporated common stockholders was $859.9 million. That is a nice jump from $600.6 million during the same period last year. For the 9-month period, that is January through September, net income attributable to common stockholders was $1.1 billion compared to $1.9 billion last year. So while the quarter was strong, the year-to-date picture shows a decline. This could be due to a few factors we'll explore later, but it is worth noting that drop. Digging into the revenues for the 9 months, that is January through September, the total revenues were $13.7 billion. That is a considerable drop from $18.6 billion in the same period last year, a decrease of almost $5 billion. A big chunk of this comes from the insurance segment, specifically net premiums, which fell drastically from $7.6 billion to just over $2.1 billion. This is a huge swing and definitely warrants a closer look. On the expense side, total expenses also dropped significantly from $18 billion down to $13.6 billion. The insurance segment's net policy benefits and claims also saw a major decrease from $11.9 billion to $7.6 billion, which makes sense if they are writing fewer premiums. Now for the volatile part, the investment-related stuff. For the 9 months ended the 30th of September 2025, the company reported a net investment-related loss of $845.4 million. That is a worsening of the loss compared to the same period in 2024 when they had a loss of $780.1 million. This segment is where the market swings really hit, and it is clear that the investment portfolio took a hit this year. These numbers are important because they directly impact the company's profitability, especially in their insurance operations. When we look at fair value measurements, especially for level 3 assets where the pricing inputs are unobservable, meaning management has to estimate a lot of the value, we see some interesting numbers. For the asset management and strategic holding segment, alone level 3rd, assets stand at nearly $64.4 billion. That is a massive number, and it shows how much subjective valuation is inherent in their business. The insurance segment also has billions in level 2 assets and liabilities, highlighting the scale of their operations and the reliance on estimates. This is where being a decoder really matters, because these aren't hard numbers from a stock market transaction. They are educated guesses, and those can be wrong. Let's talk about what KKR has promised to do in the future. They have unfunded commitments of $10.4 billion to their investment funds and vehicles. That is a huge amount of money they are on the hook for. Then there are capital markets commitments totaling $500 million. And Global Atlantic has commitments to purchase or fund investments of $5.5 billion. These are significant obligations that could impact their future cash needs. Remember what Warren Buffett says about commitments: they can be anchors if not managed well. Now for the drama, because no corporate filing is complete without it. KKR is facing some serious legal battles. There is a major ongoing lawsuit in Kentucky against KKR Incorporated and its co-founders regarding fiduciary duties. Initially dismissed, then revived, it is now consolidated, and KKR is vigorously defending against it. Importantly, a settlement attempt in January 2025 fell through when a Kentucky court declined to approve it. This means the legal fight continues. There is also a shareholder derivative lawsuit alleging breach of fiduciary duties and waste of corporate assets in connection with past transactions. And then there is the antitrust investigation by the US Department of Justice regarding HSR filings. They filed a civil antitrust complaint seeking penalties and equitable relief. KKR is fighting this too, so there is a lot of legal uncertainty hanging over them. These legal matters can be incredibly costly and distracting for a company overall assessment. So what is the takeaway from all this data? KKR's asset management side seems to be growing with higher management fees and impressive realized performance income, especially in private equity. They're also seeing growth in their insurance business in terms of investment income. However, the significant drop in net premiums for the insurance segment and the considerable net investment related losses point to some headwinds they are facing, probably due to market volatility. The legal issues are a major overhang. While they have a strong equity position, their substantial unfunded commitments and ongoing legal battles mean there are risks to watch. The company direction seems set on growth, especially with the acquisition of Healthcare Royalty Management, LLC, and expansion in their core private equity real assets and credit strategies. However, the sheer scale of their commitments and the ongoing legal battles in Kentucky and with the DOJ are substantial risks that could impact future financials. KKR is navigating a complex market with both significant opportunities and considerable challenges. Alright, that is our deep dive into KKR's latest filing. What do you think about their performance and the risks on the horizon? Let us know in the comments below. If you found this breakdown helpful, give this video a thumbs up and subscribe for more corporate decodes. And remember to check out our Discord community, linked in the description for more in-depth discussions. Thanks for watching, see you next time.